Today's show is sponsored by Peak Housing REIT. To learn more, go to thepeak.group.
Nicole, click it up. Let's go.
Dude, I don't know.
The Compound and Friends. Say it.
Friends, episode 53.
There we go.
Yeah.
Hooray.
Hey, where's John?
I just noticed Sean's not here. What did you do to him?
At his cousin's wedding.
Okay.
Oh, boy. There are a lot of cousins' weddings going on.
It's the 4th of July weekend.
It is. It is. All right, listen. We have a very special guest here today. Felix, we do this very professionally.
I can tell.
We wrote an intro for you.
You don't just throw this show together.
No, we really don't. All right, Felix Salmon is the chief financial correspondent at Axios and host of the Slate Money podcast. Prior to Axios, Felix was the senior editor at Fusion, a financial blogger at Reuters, and you have probably written columns for,
Everyone, yeah.
I read all your, over the years, I've read everything. You were writing for Portfolio.
Yep. I had like the OG econ blog at Portfolio. I had an econ blog for Nouriel Rubini. Did you go back that far?
Did you really?
That was in like 2007.
So you really came to prominence during the great financial crisis, very early, because you wrote about the formula that blew up the world, which...
David Lee. Yeah.
So
and the
give us
Gaussian
the
copula
background on
function.
that.
So basically, the way you were valuing credit derivatives was by looking at how defaults had behaved in the past and how house prices had behaved in the past. And there was this wonderful thing called the Gaussian copula function that you would plug your numbers into that and out would spit a fair value for synthetic CDS on the mortgage market. And you would say, great, okay, this is what the computer says, it must be true. And you'd go out and and it was AAA rated, so you could lever yourself up 1 million times. I'm
sorry, hold on. Are we going to cut the music? What's going on here?
Yeah, you
there we
have
go.
to
Thank
cut
you.
that so
Jeez.
Felix doesn't start rapping.
Exactly.
I got distracted
we were
getting
very
Michael's.
in
I was
danger
getting Michael's
of-
cable.
He was about to say, my money don't jiggle, jiggle. I'm just telling you, I knew it was coming.
It folds,
so
yeah.
It does fold.
Sorry. Go on.
So the long and short of it was that the formula was deeply broken, and it was this kind of value at risk formula that told you how much these these assets could decline 95% of the time. No one realized that the other 5% of the time, they would just blow up completely. And people believe the formula, and that is, there is not one cause of the financial crisis. There are many, many causes of the financial crisis, but that was, in terms of the deep financial engineering and structure of the financial crisis.
But how the hell did you know
was
that?
one.
Are you like a mathematician?
He watched Margin Call.
Exactly. Well, Margin Call came out later, man.
Kidding.
But no, it was a bit like that. That kind of who is it? The Stanley Tucci character in Margin Call, who's just like, have you seen? This is 5 standard deviation events, and we are not set up for this. And
they
when we
walk
wake
him out
up
of
in
the
the
building.
morning, there's going to be this $2 billion hole in our balance sheet. That was effectively what they were doing, is they were valuing this sort of toxic waste using the Gaussian copula.
Now, when you
formula.
wrote that, it made a really big splash for, I think, a couple of reasons. The first is it was more sophisticated than anything that the Wall Street Journal or the New York Times were doing about, at that point, the mortgage market. They didn't have bloggers. They had really good reporters, but I don't think they had opinion people that understood markets and could write that way. So I feel like when you wrote that, it almost ignited something that continues to this day, which is very well-informed market people doing not only news but opinion for Deal Book, everybody.
Right.
Is that how you see it?
Right. Yeah, exactly. The people realized suddenly at Portfolio, we had a bunch of really good reporters, and I've never claimed to be a really good reporter, but what they didn't have was people who just broadly understood how bonds and derivatives work. And that was what everyone was asking. They were like, can you explain how a CDO waterfall works? And I'm like, I can actually do that. So that kind of explanation and understanding of the nitty-gritty of finance became very popular and useful. And next thing you know, you have Matt Levine.
Yeah. Well, right. I was going to say there is a lineage of some of the better market reporters or commentators, and I feel like it really started in that moment, and now it's not uncommon.
Yeah, I mean, so like Alphaville was very early onto that.
Yeah,
bus,
Cardiff and
like
Izzy.
Izzy, exactly. Yeah. And then and I'm not sure. I feel like the blog, as we all know, blogs are dead now. So I don't know. There's not like the same kind of intellectual back and forth where I would post something about, some obscure derivative, and then someone else would reply, and then someone else would reply, and you'd get like
I do remember that though.
Back and forth with like Steve Randy Waldman going deep into the weeds of the bond documentation and that kind of stuff, or I'd be going super into the weeds about collective action clauses in sovereign debt, contracts.
Where is that taking place? Is that on Twitter or is that on podcasts?
I feel like it's a lot of it is gone.
Yeah.
Like it was this brief shining moment where there was this kind of economics grad seminar going on in the blogosphere every day, and
nobody's time for that shit. It's boring.
They do have time for that shit, but they just waste it all on TikTok.
Yes. So that's where it's all gone.
I actually wrote a chapter of a book about the death of the blogosphere in the 2000s, and there's a bunch of different things that killed it. One was that the mainstream media started buying, hiring all of these bloggers and then putting more constraints and shackles on them.
Well, it was Twitter. Joe Weisenthal famously said most blog posts should be tweets.
But then Twitter was the other one, right? So Twitter comes along towards the very end of the 2000s, and then it's that much more immediate, and it does put one of the many knives in the bleeding out body of the blogosphere.
The blogs also, myself included, all cut their comment section, because if you're a solo blogger, there used to be a lot of like great shit going on in the comments because like people that had nowhere else to go to put their thoughts.
There's now like one comment section left in the world, which is Marginal Revolution, and then everyone else is just like doesn't work.
Because it's too much trouble to police. Like I remember convincing Barry to kill his comments, and it took me like 6 months to get him over the hump. But I said, go look at the last 20 comments on the last post you wrote. If 5 of them are constructive or further the conversation at all, I'll never bring this up to you again. I had already looked, so I knew. But it's just like if you're a one-man operation or a two-person operation trying to do even like a great blog like Calculated Risk, right? And you're trying to like put out content, and then you leave a comment section, you go to sleep at night, you wake up the next morning, and there's all kinds of horrendous shit on there, or people saying ugly things to each other. Who wants to host that? Right. So I think that partially helped to just kill off blogs as an interactive medium.
And then the other big thing was Google Reader getting killed. And then like most, those of us who were really deep in the blogosphere, we read all of our blogs via RSS.
I remember when that happened. Was that 2014? That sucked.
Yeah.
When they killed that thing.
And then, there was no good reason for them to do it. But the minute they killed Google Reader, then that was the end of it.
There were some blogs that lost a third of their views overnight.
What do you use now? You use something similar.
I use Google News. What do you mean, to find information or to broadcast?
Whatever. But no.
Do you have an RSS reader that you use?
No, but we have an automated email that goes every night based on RSS, but people have to subscribe to the blog. So they can't wait for an RSS feed that's never going to come. But RSS still exists.
Yeah, I mean, podcasts are RSS.
So we use it to populate an automatic email. So if I do 3 posts in a day, those 3 posts in their entirety will go out via email. And we're doing that with yours too, by the way. I don't know I guess maybe you haven't taken an active interest, but there's an email for your blog.
No, it's not the same. It's hours later. I know.
It's not the same. We actually could time. So we say 5:30.
But so you do a podcast now. What's your thoughts on podcasting versus blogging? Isn't podcasting so much better?
No.
Not in this case.
Why?
No, I mean, so we're having a pool session right here, right? It's perfectly interesting, but it's not. If I wanted to say actually give you a good short explanation of what I wrote in 2009 about David Lee and the Gaussian copula function, if I had a blog, I would sit down, I would probably skim the article and remind myself what the hell I wrote, sum it up pretty effectively, and be a lot more accurate and clearer and useful than I was in my random blathering earlier on, right? And you can be a lot tighter on the blogs. You can link much more effectively on blogs. There's no real effective way of linking out to someone from a podcast.
Well, charts and tables
right?
belong in a blog post.
Yeah, and you get charts and tables, but more to the point, blogs are a conversation, right? And they're a conversation between a lot of bloggers and they're ongoing. And podcasts don't
That's
work
true.
like that.
There's no cross-pollination.
There's very few podcasts who are like, so-and-so just said
Right.
this on one podcast,
Right.
I'm going to respond to them, and then they respond to
Yeah,
me.
it's so funny.
That's true.
That does happen though in other verticals outside of finance, like all of the TikTok bloggers. I
Oh, TikTok is a conversation.
but they
for sure.
are going back and forth on each other's
Yeah,
shows.
because that's built, but it's also built into the platform, right?
Yeah.
There's this thing called stitching, and they make it easy to interact with each other
Yeah.
in the way that it's very hard in podcasting.
Yes. So, right, it'd be very rare for, let's say, Cardiff does a show at the New Bazaar, and we have a guest that disagrees with what Cardiff was saying, would come on our show and say, let's do 25 minutes on why Cardiff is an idiot.
Well, you also can't tag someone in a podcast, right? Like they might not even know that you're talking about them unless somebody else tells them.
Right.
True. Very true. What do you make of the state of FinTwit overall? Because I feel like Twitter had a big moment in 2020, 2021. It was like one of the few outlets people had
Yep.
to, like, not teenagers who mostly went
Although
to TikTok.
actually, to be honest, like the social platform that really had its moment in 2021 was Reddit.
Yes.
So Twitter's been on a long, slow decline in
I
terms
agree.
of quality for the best
Ever.
part of a decade
Yeah.
at this point.
Yeah.
And I would say FinTwit with it. It's
Yeah.
not what it used to be. And once they kill TweetDeck for Mac on tomorrow?
Oh, are they doing that?
Then it's just that's going to be that. It's like that killing TweetDeck for Mac is a little similar to Google killing Google Reader.
Why are they doing? What
Whose
is the
decision
stated
is that?
reason of
Whose
doing
decision
that?
is
Because
that?
every power user of Twitter I've ever met was a TweetDeck aficionado.
Right.
Why would they do? Why would they take something away from their most active users that they love?
I have an idea. It's a terribly run
Are they
company.
idiots?
Maybe that's why. Yeah.
Exactly, yeah.
So now, what do people who are on Twitter all day look at?
They want
swipe?
everyone to go to the web. There is still TweetDeck for web, but that's just it's an app. Web apps are terrible things, and
Yeah.
I broke up with TweetDeck like 4 years ago because it was just my brain was melting. So I just use the website. It's not great, but
you do?
yeah.
Okay.
But the point is, like, you can't have the website in the corner of your eye. You need to actively navigate to it, and
True.
and people realize that when they don't actively navigate to it and they don't press that button and load that tab, they're happier.
Oh well.
And,
Totally.
everyone who gets off Twitter is happier for it.
That I could
this
that I
is
could
just
tell you.
this move is a way to make everyone. It's going to make a lot of people happier, but it's going to massively reduce whatever engagement is.
Twitter
left on
is
the
good for
platform.
anxiety.
Yes.
Right? It's very good for that.
Yeah.
But it rewards just the most toxic behavior, just dunking. So
And it also rewards just like, cheap, snarky jokes. And I love cheap, snarky jokes.
I
but
used
that's,
to also.
That's not actually.
What's the longest stretch you've ever been off of Twitter for? Have you gone a few months?
So I've gone a couple weeks, and then the first 3 months of this year, I was pretty much entirely off it. I was on book leave, and I disappeared off to a cottage on the west coast of Ireland, and I basically just said, "Yeah, I'm not going to."
But so if you're a journalist, you really can't live without it. I mean, I guess you can, but it makes your life much more difficult.
How do you know what people are talking about, or like
But this is the thing, right? The people I follow on Twitter are not my readers. And it's not even the people I follow. It's the people who tweet a lot into my feed are definitely not representative of what my readers
No,
care
they're the
about.
opposite. Yeah.
I'm just saying for news purposes.
So like Elon Musk keeps on complaining about bots, right? Because he sees a lot of bots on his platform. Because if you look at the tweets that he sees when he calls up Twitter, that is not remotely representative of anything.
But he
seems to think that is representative of something. So you get a very skewed view of what people care about,
Totally.
what people are talking about, and it's actually, as a journalist, if you wind up writing for what the people who are tweeting at you are saying, you are going to go in a very dark and unhelpful
I think that's a
direction.
huge part of the political problems that we have is that a lot of people running for office or in office think their job is to please what they see on Twitter.
well, that's what worked for Trump.
Right, but there's one Trump. So now you have 500 other people who are basically giving into the most rabid people in the world who are active Twitter users.
Although that is also built into the structure of the political system where, you have this primary system. We just had an election a couple days ago. I don't know how many of you guys voted, but turnout was tiny because it was a primary. And the only people who vote in those primaries are the rabid, Twitter commenters.
Yeah.
And so you wind up, the people who win the primaries and who wind up eventually, because someone who wins a primary is always going to win the general election, that person is always the person who threw enough red meat at the rabid crowd of the people who vote in primaries. And those are not normal people.
Yeah. But they're the people that are very good at getting attention. But the vast majority of people are not represented by that at all. So if FinTwit is dying, does everybody end up with their own Substack?
But it's not dying. It's just everyone's miserable.
Is.
No, it's dying.
Is
it's
it?
dying.
Yeah. It doesn't have the influence it used to have.
How would you know?
Everyone knows.
Because Josh is FinTwit.
Yeah, he thinks
No.
he thinks he leaves and the place
And
fell
he's dying.
apart.
Have you seen
No.
his back?
People
He
send
tweeted
me-
yesterday.
I have to send a tweet at a pre-specified interval. So I try to send something funny.
People send you what? How do you know Twitter's dying?
Because people send me a tweet that's blowing up and there's 30 likes on it. Unless something is overtly about gun control or abortion rights, there's nothing anyone can say about the markets that goes big. I mean, really, honestly, what could anyone say? Bitcoin tweet is not going to do 7,000 likes. I remember there used to be a Twitter where things could go really big pertaining to our subject matter.
And even if you get away from the metrics, there used to be a Twitter where
It was fun.
Joe and Matt and Cardiff and me and we would get into actually gnarly, interesting conversations,
Yes.
and you would learn shit, and we would learn from each other, and there would be a super interesting conversation going on there. I can't remember the last time I got into a super interesting conversation on Twitter.
No.
That's not what it's for.
That's not what it's for anymore. I agree. It's turned into a vehicle with which to express.
It's to score points with your
disgust.
constituents,
Right.
with your followers. That's it.
Do you think Elon's going to end up owning Twitter?
I can't
I'm
see.
50-50 I'm 50-50
I can't
right
see
now.
how he can get out of it. To be honest, that.
Okay.
That contract that he signed and where he waived due diligence is a pretty cast iron contract. He has $33 billion that he needs to pony up, so he can't claim that he doesn't have it.
Right.
What happens if his stock crashes and he literally can't pay for it?
Well, I mean, but that's the point, right? That his stock has already crashed,
yeah.
and he's still worth, well over $100 billion. He owns a huge chunk of SpaceX. There are lots of ways that he can pay for it. So it's very unlikely that he's going to wind up where his net worth is less than $33 billion, and he literally can't.
What
raise
if?
that.
All right. Here's a scenario. He makes it very clear that he's willing to be in court for 3 years over this, and then the Twitter board decides. Yes, the fiduciary responsibility we have is to get that dollar figure, that offer. However, that might not be in our shareholders' best interest to have this drag on for 3 years. Maybe we're better off rescinding, the deal or whatever the legal term is, and making a go of it ourselves. Is that possible?
So here's my theory is that the market value of Twitter, absent an Elon bid, is the
15.
market value of Snapchat.
I was about to say, what's Snap? I'm looking.
What is the share price of Snap?
Snap has more users.
Snap is a bigger company.
But there is this weird. If you look pre-Elon bid,
Yeah.
Twitter and Snap traded at exactly the same price.
Snap's $20 billion. And
No,
what's
no,
Twitter
what's
right
his
now?
actual share price?
Oh, the share price is 13. Who cares about the share price?
No, this is what I'm saying.
Okay.
The share price of Twitter and the share price of Snap always used to be exactly the same. And now...
Oh, you son of a bitch.
Holy shit.
You son of a bitch. He's right.
Wait, when was the break?
when Elon made his bid.
Yeah.
That's hilarious.
And so
Facebook since then has been cut in half.
That's actually very funny.
And so
oh my God, Felix is super right. Look at this.
Yeah.
So what you get is the Twitter board is basically saying if this bid evaporates, we're worth, call it $13 a share. So they, so if Elon drags it out into court, they will maybe agree to a settlement where they will let Elon walk away, but that settlement will not be $1 billion. That settlement will be, 20.
It's not a slap on the wrist.
15,
it's a big
20
number.
billion. It will be a large amount of money that Elon needs to pay to get out of this deal.
The only thing it also might depend on market conditions. If we're in the toilet 6 months from now and Twitter is even lower than it would be otherwise, they're going to fight for that $33.
Basically, what Elon always has the option to start a sale process before he even buys it, right? Try and work out like who the hell might possibly want Twitter. Work out
and like lose $8 billion in the process.
Exactly. But buy it for $44 billion, sell it for $30 billion, lose $14 billion, and maybe that's the cheapest out that he has.
Or keep a piece of the equity.
Right.
We'll sell you 90% of Twitter. I'm keeping 10. I'm going to take a loss.
So he has.
So who's he going to foist it on?
But it's a good question because Lena Khan's at the FTC. She's not going to allow any of the tech companies to buy it, and quite rightly so. So it's not obvious who else.
Okay.
Is
wants
Disney
it.
desperate
And for
enough?
national security reasons, they're not going to let TikTok buy it. They're not going to let, I don't think, they're not going to have another Rupert Murdoch come from overseas and own that asset, I think. Like, I think there would be a political battle.
Oh,
over that.
Waystar Royco is a natural buyer.
Waystar Royco should totally buy TikTok. Yeah, I mean, buy Twitter. That would be glorious. Yeah.
That's like the worst, but isn't that like the worst potential outcome is some maniac manages to buy it just because they're a steel magnate in some third world country?
No, that is the base case scenario right now because Elon Musk is that maniac.
Okay. So he's a maniac who resides here.
Yeah.
But, okay. Do you think that...
Yeah, he was born in South Africa, remember? He's not actually, he became an American citizen, but he's like me. He's an immigrant.
Do you think that he really
Like
wants
Rupert
to
Murdoch as well.
take that platform and actually spend time on it? Or do you think he could be the kind of buyer who just basically lets people do whatever they want?
So this is interesting. Okay, we're recording this on June 30. You guys have the things up. It's now, I think, 9 days since he last tweeted.
Is that true?
Oh, wow.
Elon Musk has gone over a week without tweeting, which is unprecedented. No one can remember the last time this
He
happened.
loves it.
He reached 100 million Twitter followers and didn't say a thing.
This guy. Here's his last tweet.
Yeah, I mean, he's like some
for those
dumb
listening,
He's at a gas station. He's at a
7-Eleven
7-Eleven gas station, and the price of gas is 7-Eleven. That's the tweet.
Maybe they can't do any better than that.
And he's like, that is the best tweet I will ever do, and I will just like peace out.
You know what I'm going to retweet
mic
to Scott?
drop.
You know what I'm going to retweet to Scott? 69,000.
69.
The,
Nice.
course.
the stars are
Of
aligning.
course it did.
Yeah, you know, someone at Reddit orchestrated that one.
I think the Tesla share price had also hit 7-Eleven was part of a joke.
Oh, really?
Yeah, I think that's why he was.
This guy.
Maybe I do need to come back. So why is he silent right now?
Why is he silent? This is a very good question. But in the days before he went silent, and he was like easing up on the tweeting in the days up to it, there was this big public letter from the employees of SpaceX saying, "Can you please shut the up on
That's
Twitter
true.
because you are really not doing us any service here." And he wound up firing half of the people who put the letter together, but kind of sounds like he was listening to them.
Yeah.
You know?
Well, they were basically saying like you're demoralizing the workforce. So if
Exactly.
you really love SpaceX, then
How
spending
about,
all that
how
time
about
on
being a
Twitter
Twitter
is not
employee right now? I mean,
Miserable. I mean, on the one hand, you can probably just phone it in, right? Like, unless you're the head of product who got fired.
that's true. Your boss probably doesn't give a shit at this point.
That's got to be that's a tough situation.
But Elon has said he's going to fire people before he starts hiring again, and he'll only hire again if he can get it growing
That's
again.
good for morale.
And no one has any real reason to believe that he can start growing it. He maybe the reason he's tweeted is because he's lost internet access because he's hanging out with Jack Dorsey in Costa Rica.
Has any company done less with more than Twitter?
Well, that's a good question.
So the wonderful Mark Zuckerberg quote, and like literally Mark Zuckerberg is one of the least quotable people on
call him a
planet
clown
Earth.
car?
He said that they drove a clown car into a gold mine.
That's what he said about Twitter?
Yeah,
Okay. That's actually pretty good.
which is a great quote.
yeah. That applies to so many things now.
Man,
that I think about
Mark
it.
is so funny.
Yeah. Oh, that Mark, he's such a cut up. Hard pivot. You wrote an article after the meme stock craziness, and it's become a 19,000 word essay that's going to go in a book. and it's about the different generations and how they invest, right? Gen X to Boomer.
Well, I mean, basically starting with the boomers. And like, I actually owe you a lot of credit for this one because you
I accept
helped
Celsius coin.
me like understand how incredibly difficult it was for boomers to invest in the market. You know, like Gen Xers like myself. I remember having on Twitter actually a really wonderful sort of one of those useful conversations where you actually understand why you're talking past each other and you go, oh, now I understand what you're saying. Like we were having this conversation about whether journalists should own stocks. And I was saying, you know, because I was on some ethical high horse or something, I was saying like journalists shouldn't own stocks. And this other guy was saying, of course you should own stocks because you need to, you know, provide for your retirement. And
wait, you mean individual stocks?
So this is why we were talking past each other, right? Was that for me, like owning stocks means, you know, I mean, I'll own index funds, I'll own some kind of like robo algorithm thing that invests in the stock market, but I never know which stocks I own, or you know, there's no way that can really influence my my journalism.
You have an index. You're not like rooting for one stock over another.
But this guy on Twitter I was talking to, like, it kind of barely occurred to him that was even possible. You know, that there is an entire generation of boomers who, like, they think of ETFs as this, like, newfangled thing and index funds as this newfangled thing. And they're like, because what investing is you try and work out which stocks to buy and you know which ones you own and you follow them and you try and hold them when they're going up and sell them before they go down. And you know, you
as
walk around
personified by Peter Lynch, Jim Cramer, like that generation.
And you walk around the golf course like with like background knowledge in your head of which stocks you're long at any given time, and like who the has time for that? But this is what investing was,
Yes.
you know, and that was like a very difficult, complex thing which you needed to, you know, have a bunch of time and money to be able to do. Then the passive revolution happens. All of the Gen Xers pile into index funds because it's so much easier and it outperforms. So obviously, but then, you know, you get the sort of the Great Recession, the millennials graduating into
no jobs.
Shitty, you know, world of no jobs and no money. This kind of like general feeling of nothing is ever going to work for me, and I don't have any savings anyway. And so, like, you know, maybe someone can talk to me about index funds, but it doesn't matter because I don't have any money. And that breeds that, and like the zero interest rate policy winds up breeding a sort of YOLO attitude to the markets, where you just want to take massive gambles, and that then ultimately manifests itself in crypto, in meme stocks, and all the rest of it. And it's a whole new way of thinking about investing. It's just like where can I like. Where am I going to YOLO my? Where am I going to like degen?
How could I 10x my money right now?
10x is nothing. Where can I 100x? Where can I like 200x? You know, and that's it brings all of the boomers and the Gen Xers out in hives. We're like, what? You can't do that. You know, you will wind up losing all of your money, and they're like, well, I don't have any money to lose. So what difference does it make?
And then a few of them made spectacular amounts of money, which were the examples that their peers would point to and say, what do you mean this doesn't work? This guy's in a private plane and he just bought the stadium naming rights for 2 teams.
And then you get stimulus checks.
Right. And then all of a sudden you give people money.
But the point about the stimulus checks, right, is that they're big enough that if you YOLO them into something that 100x is, then you can make real money. But they're too small to actually be a retirement fund in and of themselves, no matter how successfully you invest them.
I had a call set up by a friend of mine. I had a call with a guy last week, just like a hello. He's building something. He parlayed 30 grand into 8 million between 2020 and 2022. I don't know how much of it he kept, but he is now building an investing app for his generation of investors. So this is a guy that went like 30 turned into 90, 90 turned into 180, like probably 9 or 10 trades in a row that just worked. Some of it crypto, some of it options, just worked. So he's one of the ones.
And now he's like, anyone, if I can do it, anyone can do it. So I'm going to build an app to
So he's
allow
going to build
everyone
an
to
app
use all of their money.
where
Great.
he's going to build an
Awesome.
app where everybody, it's like a social network, but then it's connected to your actual real trading, and you could follow other traders. And I'm like,
How many times has this app been built?
so I was going to say, like, nobody is going to be able to replicate what you just did. So you're going to end up having people that have others follow their trades until they lose money, and then they're going to ghost. So like, it's not going to be a million people worth
But
following.
I feel like this app already exists in like 18 different
18 different
There's a bunch.
versions.
There's a bunch.
So
Public,
no, but
common
this
stock, there's a
this
bunch.
is the one that's going to bring accountability to the world. Anyway, but that I get that mentality if that's where you're coming from. Like if you just did that, you believe it's possible because it is possible because you just did it. So it's a mindset.
Right, it's the same mindset where you think that, like, you know, if Ron Johnson can do amazing things at Apple, then he can do amazing things at
some
whatever
point,
any
at
other
some
company he
point,
joins.
everybody gives in. Like, it's like, all right, I've seen like this 9th asshole that I know who's getting rich. Like, I gotta try.
Yeah.
There's only so much you could see of that before you're like, I gotta try.
And in the pandemic, it's all you saw. There was nothing else to watch. There was the only thing to watch was people your age, if you were like 25, making like 10, 20, 30x in crypto.
Felix,
Yeah, and actually, I to be fair, like I did see a bunch of Gen Xers doing this. I have this one story about this 13-year-old I know who had like a hedge fund, and he was like, he went around to all of his parents' friends and said like, give me money. And his parents' friends,
Yeah.
you know, his parents were like, here's $20. I'm going to open a Robinhood account for you. Go have fun. And then
he's
he
like,
would
no,
go-
20 million, bitch.
and then he goes up to his parents' friends, and they're like, "Oh, I'll throw in some money. How much do you want?" He's like, "Minimum is 1,000." And his parents
minimum
are like,
became
"Why
1,000
are
very
you giving
quickly."
this 13-year-old $1,000?"
quarterly liquidity.
He didn't. So the wonderful thing is, he didn't even have a spreadsheet or any way to sort of work out like who he owed what to.
Yeah.
You know.
He has to calculate time-weighted returns
Exactly.
for 30 different investors.
In June 2020, I was in my office and my plumber walked in. Naturally, he asked me what I was trading, and he goes, "Oh, you do this?" He took out his phone, whole list of you name it, Zoom, GameStop, whatever. It was everywhere. It was
But
ubiquitous.
he was crushing it also.
Oh my God, yeah, he was up. I mean, he was up a ton, obviously.
But he wasn't launching a hedge fund. He's like, I'm an idiot, but look how much money I made.
I haven't heard. I'm not going to say he didn't launch a hedge fund. It's possible.
Okay,
It's possible.
it's very possible. What's this chart with the red and blue that we have here?
Oh,
Put that
we
up.
did. This is sort of a weird pivot, but in the doc you were talking about like media, blah blah blah. So I overlaid the VIX and my page views, and this incentives
Pretty good.
incentives drive everything, and this is why I woke up the other day. My wife watches Good Morning America, and it was like, the mall bombed. We've got migrant workers dead in the truck. We've got the attack on the Capitol. We've got Walmart sued by the FTC. We've got the missing man. It was just one after another. And why? Because higher the VIX, higher the clicks. If it bleeds, it leads. It's just that's it. That's the game. That is the game. This Duncan, throw up that table. So I was like, all right, that looks pretty close, but let me like try and quantify it. So I broke down my average page views by VIX regime. Under 25 is a pretty placid market.
This is nuts. Wait, so for the people that are listening, not looking, so basically what this is saying is when the VIX is under 25, which is like a normal market. Your page views
Like 5,000.
This is monthly?
Daily.
Excuse me.
Not to brag.
This is daily page views are about 5,000. VIX 25 to 35, you're over 6,000. The really big jump though, VIX north of 45.
Page views go from 5,000 to almost 14.
Right.
So that's what it is. People that put out content, they don't want the world to burn, but that's when they do better.
And they will
absolutely.
accentuate the
You know
aspects
this.
of the world.
I know this. Like, you know, I'm the guy who made my entire career because there was a global financial crisis, and I could talk about it.
Felix wants your investment account to go to zero.
I totally do. But yeah, so this is the thing, right? Is that when the VIX is when there's market volatility, especially when markets are going down a lot, or when you have like some very weird thing like GameStop where markets are going up a lot, people, you know, it breaks through the business pages into general consciousness.
Becomes pop culture.
And then people are like, oh, I should care about this right now. Of course, that right now is always exactly the wrong time to care about it, right? That is actually exactly the time when you should just put on your earmuffs and your blindfold.
There's like very few iron rules in finance. That's one of them.
Right. But that's when people are like, market, what's a market? And they wind up on your blog.
Civilians who would never read a financial blog or in search of information.
Ooh, stocks, what's this?
Exactly.
Right.
So you get the page views of the people who suddenly care at exactly the wrong time.
We saw that on YouTube, right, Duncan? The videos went crazy when the VIX
definitely.
was
Yeah.
right.
Actually, let's talk, Duncan, throw this chart up.
That's why when you tell me about our traffic, I want to start VIX adjusting you.
Okay.
Would that be okay? I want to start adjusting you for volatility.
So I made this, like, I'll give this a shot. You go up, I'm smart, I'm a genius, and it's like I should have used leverage. Market starts to roll a little bit. Hey, this is getting harder. Market's down more. Hey, this is weird. It'll come back. What the hell? Oh. And I kind of think we're like at the O part of the cycle where we're past like the denial and we're at the acceptance where it's just
I think we're at what the heck.
You think so?
Yeah.
You think we're higher?
Well, wait, stocks or crypto or what?
Just general.
General?
I think now, like, it really occurred to me like, oh, we're in a bear market.
So I have a interesting theory about this because again, if you talk to the people who read Barron's and play golf, they will, or their financial advisors will tell you that there is a kind of a natural tendency to buy high and sell low.
Of course.
And Josh, being a financial advisor, is like, of course, this is what people do. But I feel like how we were saying that you shouldn't consider the people you see on Twitter as being representative. I honestly think that financial advisors shouldn't consider their clients to be representative.
That's interesting.
And that this tendency might be true for clients of financial advisors, but I think it's less and less true broadly.
It's that fear is overblown. Like, I can just tell you from experience, we do not have tons of clients that are interested in buying low and selling high. I know nobody wants to do that, but it's very few people.
No, what I'm saying is the opposite thing, where like when the market falls, people are like shit and want to panic and sell.
Oh, you think they do?
No, I'm saying
You're saying the kind of person that has a financial advisor is that kind of person, but that's not everybody.
One of the reasons you get a financial advisor is precisely because you're self-aware enough to know that you will panic at the wrong time, and you want someone to hold your hand and say, just like,
Of $1 million households in America, 28% are self-directed. So 2/3 are working with somebody. In some cases, that's only quasi getting advice. It might just be a broker.
But it's also a money thing.
But
if you are prone to do the wrong things and you have $40,000, it's not really going to hurt your future that much. If you've got $1 million, like, it matters. There's real stakes there.
Yeah, I think.
I guess what I'm saying is that this like behavioral drag that people love to talk about, that people always do the wrong thing at the wrong time, and you're nearly always better off doing nothing. I mean, that's true. You really are nearly always better off doing nothing. But I think what we saw, especially in March 2020, was that the anticipated sort of selling of people.
It never happened.
It never happened.
I agree.
We had examples of the opposite.
Happened. Yeah,
because I called my partner Chris, and I'm like, how bad is it? Like, are people freaking out?
People are adding.
He's like, no, you don't understand. People are calling and trying to put money in.
Exactly.
So I said complacency.
Josh said we're not at the bottom yet. I think that chart.
Tell them no.
That chart that Dalbar shows the average investor underperforming inflation is total bullshit.
It's been debunked a million times. Still.
Like, the average investor is really, really not even close to that bad. Not even close.
Yeah, I think you're right about that. But for the subset of people that very much are prone to thinking they're a genius at the top and wanting to, why didn't we own more of blank? And then at the bottom, like, oh my God, I can't believe I'm living through this. Get me out. For that, whatever percentage we think that is,
that's real.
It's people with a lot of money.
But by the way,
I do think it's also. I also do think it's true in crypto that one of the reasons that the crypto route is so bad right now is because people just weren't happy being long, they needed to be levered long.
It's all leverage. Crazy to me.
The amount of leverage, like the reason why there were high interest rates in the crypto market, the reason why all of these people were offering 8% on stablecoins was because there was just this huge demand
for leverage.
And you're like, this is insane. Like, you're buying something which you expect to go up 100 times because crypto is going to eat the world or something, whatever your thesis is, and that's not good enough for you. You need to add a whole bunch of leverage.
It makes sense to add leverage on an asset that doesn't move, like treasury bills, for example.
Right.
But to add leverage on a 30, 50 vol asset, whatever it is.
Well, I asked you that question. I said, why isn't the most volatile asset class on earth good enough 1-to-1? Why does it have to be 20-to-1? What is the need for that?
I only use 5 times leverage. So
You're
don't look
only
at me.
5. So
But what's interesting about this blow up, it's institutional leverage being unwound because
100%.
I've thrown this chart up a bunch.
Yeah.
This chart shows the number of addresses with more than 1 Bitcoin. It's at an all-time high. It's not, the average Bitcoin investor is not panicking. It's institutional leverage being unwound.
Right.
Which is madness. How come, like...
And one of my favorite charts that shows that is the discount net.
GBTC.
Yeah, the GBTC discount to net
what is it
asset
now?
value.
It's 25.
No, it's 30. Yeah.
By the way, they got rejected last night.
They got rejected. So it's presumably even bigger now because everyone but that discount, it's a classic. It's a classic case of trying to find the safe arbitrage and then levering up, and then you're like, whoops, it's moved against me.
Why is that discount so big? That makes no sense to me.
Because there's a bunch of forced selling. Because right now everything needs to get liquidated.
But it's been at a discount for almost a year now.
I would love somebody to...
Why did it used to be at a premium? That's the even weirder thing.
Well, I can give you an answer. I don't know if it's true, but the reasonable answer is it's the only way people with an IRA, for example, can own Bitcoin, by buying that vehicle. You can't buy crypto in an IRA.
What changed for it to sell it?
Well, more comfort level with things like Coinbase and other brokerages. That's what changed.
So they're suing the SEC, as one does.
Yeah, good luck with that.
Yeah, I don't know if that normally turns
But yeah,
out well.
but also like GBTC is this batshit product, right? They're charging 2% a year to sit on your Bitcoins for you. And you don't even have Bitcoins. You don't, you can't use the Bitcoins to buy anything. You can't send the Bitcoins.
You can't do that anyway. I don't know what you would use a Bitcoin for in real life anyway.
I actually bought a bottle of whiskey with Bitcoin once.
What was it like? What was the process like? Easy peasy?
Actually, surprisingly easy.
It was?
Yeah, there was
in Venezuela?
Can I plug Fort Hamilton Rye whiskey on this show? It's
Do it.
Very, very good whiskey made in Industry City, Brooklyn. And I was like, I need to buy some Fort Hamilton Rye. And I have this Coinbase account with some stupidly tiny number of Bitcoins in it, fraction of Bitcoins in it that was lying around for no reason. And
We call them Satoshis.
And this wine shop in Brooklyn was like, we accept Bitcoin. So I go onto the thing and it just like connected to my Coinbase account and some however many Satoshis like pinged over. Next thing I know, I get a package in the mail with a bottle of whiskey. I was like, there you go. And
then your bank account was emptied overnight.
And then,
by somebody from South Korea.
But the fact is that I should have paid capital gains tax on that, and I didn't.
So that's the other thing is
Straight to jail.
So that's the other thing. I asked Michael. I really didn't understand this. I know he follows this stuff more closely than I do. I didn't understand how elemental the stable coins were to the asset class, to the ecosystem, and it turns out. I'm an idiot, but it turns out, of course, they're elemental because nobody goes to cash.
Well, that is cash. It's digital dollars.
No, but nobody goes to.
Cash,
it's not
cash.
like so.
The on-ramps and the off-ramps are just way too
horrible.
No, but also there's tax ramifications of going to cash.
No, but there's tax ramifications of going to stablecoins too.
Hey,
Is there?
Yes.
Felix.
Yes.
Who said?
We have winking. No, the law is that the minute you go to stablecoins,
Yeah, that's a capital gain.
that's a capital
Assuming
gain. You
made
need to
money.
pay
Fine,
capital gains tax on
But
that.
now you're doing that at a brokerage that's based in Singapore. Does that apply?
Yes, you're a U.S. person wherever
Okay.
your brokerage is.
All right. Now you can't easily though go to cash, which is why nobody does.
Right.
Because there is no cash in that ecosystem.
Right, you would have to take the money off of the platform.
So how stupid is this?
Which part?
That the government wouldn't make cash part of this crypto ecosystem.
How is that a government thing?
wouldn't it be smarter of them to do that? Like, where is this digital dollar? Because wouldn't that replace every stable coin on the first day?
Yes.
Yes.
Yeah, no, a CBDC would kill every stable coin.
What would you need one
overnight.
for?
You wouldn't need, yeah. If it was like, there are different versions of CBDCs, but if it was one that lived on the blockchain and was easily interoperable with the existing crypto world, then it would replace the stable coins. But like, the Fed is not playing that game. The Fed is not like looking at Circle and Tether and saying, we want in on that game.
Yeah.
You know, they have much bigger macroprudential worries. And what they actually worry about is that would kill
Money
banks.
markets.
No, banks.
Banks.
Yeah. So if you
could bank directly with the Fed
if I
via
can just
a digital
own
dollar.
digital dollars in my digital wallet and use those to transact, I have no need for a bank account anymore.
For the storage of the money. You still need a bank for loans.
Right. But but all bank deposits,
Yeah.
start becoming like, why do I need to go to JP Morgan Chase to put my money with them? Which is, remember, basically, in nearly all cases, an interest-free perpetual loan from me to them. And they use that incredibly low cost of funds to shore up their balance sheet and to
Do
all
their
of their
activities.
fractional reserve
Well, they
banking.
pay you 70 basis points.
But the minute that you don't, people don't make a profit on their checking accounts. The minute that everyone pulls their deposits out of the high street bank and just keeps it in stablecoins because it's so much easier that way in a central bank digital currency, like the entire financial system of the United States, that is a systemic risk.
So when they say they're studying creating a digital dollar, does that
Why
mean
can't
they're-
banks own digital dollars? Why can't you just give
So
them that?
one of the options that they're studying is basically stablecoins would be issued by banks rather than by the Fed, and that you would need to sort of go via a bank precisely to avoid that kind of.
Does this not seem
apocalypse.
inevitable to you guys?
No,
You do not think it's inevitable?
no.
No. In fact, we keep losing countries that are willing to let this shit go on. China just blanket, no, we don't have this.
Well, no, they do have a CBDC.
No. But they just are not allowing any growth or development whatsoever of any coins, protocols,
But
trading,
so
mining.
and this is the point, right? The ECNY is
What is that?
the central bank, the CBDC in China, basically, is a very powerful tool of surveillance by the Chinese Communist Party, but it's not in any way, shape, or form based on the blockchain. It's not something that you can convert easily from Bitcoin to ECNY and back. It doesn't solve your on-ramp, off-ramp problem by design. They don't want to make that easy. They basically tried very hard to ban crypto in China because, it's one of those things a bit like Ant Financial or whatever, where they're like, no, this is not good for society as a whole. Just because it's creating a few billionaires doesn't make it a good thing.
What's the country in Latin America that said that Bitcoin was a currency?
El Salvador.
El Salvador. So they're going to have a big IMF loan package come due. They're not going to obviously be able to pay it. It's going to be a financial crisis. That'll probably set back the idea that there's going to be this mass adoption by countries.
There was no, yeah, exactly. So
That's this year.
this
gonna
guy
happen.
Bukele, the president of El Salvador, the hipster dictator, he calls himself the hipster dictator.
Yeah. It's very chic.
That he is basically like the Michael Saylor of heads of state. He's like, I'm just, every time Bitcoin goes down, it's like, I'm buying the dip, and he goes down further, it's like, I'm buying the dip, and it's working out about as well for him as you would expect.
By the way, Michael Saylor's dip purchases are getting much smaller these days. He bought one for He bought the dip. He paid $10 million. He's like dropping like $500 million at a time.
He's like swiping his credit card at this point. I want to do some art stuff with you, Felix, because you're somebody that actually knows art, and Michael and I are not. But the art world, I feel like, has never been more, or maybe it has, but maybe never more obviously. The art world has never been as caught up with trends on Wall Street and crypto, and as it feels like it is now. And part of that is just because we have $5 trillion of excess money supply running around these ecosystems. What has all of this easy money and digital money and the culture going on in Miami, like what has this all done to the art world or vice versa, or even the view the other way around? Like how much is the art world feeding on this on purpose? Like what do you see happening there?
So yeah, there's a lot of different art worlds. Miami is an art world.
Yeah.
One of the main reasons that Miami is an art world is because it has this big annual art fair called Art Basel Miami Beach.
Right.
The first thing you need to know about ABMB is that it's the baby brother art fair of Art Basel, which just happened like last week in Basel in Switzerland.
Right.
And the parties and the celebrities and the NFTs and the crypto and all the dumb shit that happens in Miami, you don't see any of that in Basel.
Yeah.
Right? The grown-ups who are buying and selling like real art in Basel, like this, the hype cycle hasn't made it to Switzerland. It's made it to Miami because Miami is an entire city based on nothing but hype. The city is going to be underwater in 20 years. All they can do is party and try and forget that.
Shots fired, Felix.
So
yeah, Miami's bullshit.
Well, no, it is. It is. Half the city was
is.
built by cocaine, and now they're rebuilding everything, and it's all being built with crypto money.
Have you listened to Francis Suarez talk, the mayor of Miami?
Yeah.
He's
a bro.
He makes Eric Adams seem like really considered and intelligent.
Yeah.
There's
It makes Eric Adams sound like Marcus Aurelius.
There is very little substance in Miami, but Miami is very good at hype. And there is definitely a small sliver of the art world that loves hype, that is active on Reddit, that YOLOs into NFTs, that speculates on like Anna Wayant or Amoako Boafo or whoever the hot artist of the minute is. There's this guy in LA called Stefan Simkovitz who's famous for like speculating on art and buying art for profit and buying low, selling high, and all of this kind of stuff. Right? That is part of the art world that happens by necessity much more in public compared to the quiet kind of big deals that are done privately and no one really talks about, and what happens in museums. But eventually it does wind up in museums. So the Brooklyn Museum just had a show of Kors, who's just like a pure hype artist, right?
Yeah.
And
like street style.
Yeah.
artist.
And there are, and we just had a big scandal in Orlando, which is basically like Miami on steroids, of the FBI raiding a show of fake Basquiat's that was on at the Orlando Museum, and they just like confiscated all of them, and they were like, "Come on, guys, don't be."
Wait, Basquiat's aren't for sale in Orlando? I can't believe it. Right?
Yeah, there's a bunch of really dumb shit happening in the art. Well, there's always a bunch of really dumb shit.
Doesn't it always coincide though with the stock market bubble, and now in this case a crypto bubble? Like the art world seems to rise and fall with people having just incredible gains in speculative assets. At least in my limited life experience. I don't know how far back that goes.
It's a super interesting question because the art world still seems pretty healthy, even given all of the carnage in tech stocks and crypto and all the rest of it. There's still a lot of money pouring into art. There is a. It really rises and falls. Like the core of the art world, the real money and the real wealth and the real assets, rises and rises with the wealth of the aggregate wealth of global billionaires.
Right.
So long as global billionaires are getting richer,
That only goes one way.
that only goes one way.
Yeah.
Exactly. So as long as they're doing well, the blue chip art, the amount you'll pay for Velasquez, will always just seem to go
One of the
up.
Walmart heirs doesn't need to panic sell a
Right.
painting for liquidity.
Exactly.
So the claims about art being a portfolio diversifier and being a vehicle for outperformance of whatever you want, real estate stocks. It's grounded in reality.
No, it's grounded that is grounded in statistical legerdemain and bullshit.
Well, most people can't buy all these pieces of artwork, so you could not. It's not like a Vanguard 500. It'd be really hard to approximate that.
Yeah. Okay. So number one, it's not investable.
Right.
But number two, there's no. I mean, yeah. There's no investable art index. So when people say that art has outperformed the S&P 500, they have to do a bunch of slightly dubious mathematics and
mental gymnastics to get there.
And what they wind up doing, most of the time, not all the time, most of the time, they wind up using this thing called the May-Moses Index, which is owned by Sotheby's now. And the way the May-Moses Index works is that it looks at repeat sales of artworks at auction. So that if there's a painting that sold at Sotheby's yesterday, and then the same painting sold at Christie's 25 years ago, they can compare the price of that painting between those two data points, and then they aggregate any repeat sales that they can find in the market among paintings, and they can work out what the up and down trends are in the market. That's the May-Moses Index. It sounds like a relatively sensible way of doing things.
What's the problem?
There are two big problems. The first is that the auction houses are very picky about what they accept. If you turn up to Sotheby's with some random piece of shit painting that they're not going to be able to sell, they won't put it in the auction. And more to the point, if it won't, they'll say, well, we might put it in a day sale where you can get $600 for it, and you'll be like, I paid $20,000 for it. Why would I even sell it for $600? I'll just hold on to it. So no one sells that. So all of the stuff that goes down never sells, never makes it into the index.
Interesting.
The stuff that does sell is the stuff
survivorship bias.
Massive survivorship bias. Yeah. And the stuff that does sell, especially at the auction houses, is generally the most hyped stuff of the moment, compared to like where it might have sold 10 years ago. It might be looking good, but it's just the auction houses and public auctions are such a small part of the total art market that you can't consider that to be representative at all. And we were talking about your good friend Scott Lynn at Masterworks. He says on the record very happily that he will never buy or sell at auction. It's just like the round trip costs are too high. The amount you need to pay to the auction house is too high. Like he can't. Doesn't make sense for him to do that. Those the smart people, the private sales don't appear in these indices at all.
Okay.
And if everyone is selling at a loss privately, that never shows up in the indices.
So the indices are bullshit, but they're directionally right.
No. So here's the thing.
He's saying it's such a tiny slice.
But I'm saying look at the.
Well, just buy the winners.
Look at the
just buy the winners.
Look at the top. Look at the top 20 highest grossing artists at auction over the past 5 years.
Does that list change a lot?
It's like,
yes.
Oh, it does.
Compare that list to the.
Like you're talking about
compare that list to what it was 20 years ago, and I've done this exercise, and it's like, whoa! You look at the list from 20 years ago, and you'll see Peter Halley and Julian Schnabel and
nerd alert.
This
guy's dropping artist names.
Saul Steinberg. The Saul Steinberg from like New York, the New Yorker cover of The View from New York of the Hudson River. That guy was actually briefly at auction one of the most collected artists at auction, and was like in.
You're talking about contemporary art. You're not talking about like old masters.
So old masters, there aren't a lot that are on the market. There's no liquidity on them because they're nearly all in museums, and the ones that aren't in museums are in have been in the same family for 500 years. So it's very rare for those to.
So you're saying the top grossing contemporary artists, the index wouldn't look like 10 years ago.
Just the top grossing artists. Like one thing that has happened, right, is that the top grossing artists are much, much younger and have. The art has been created much, much more recently than it ever used to be. Used to be that you'd go to a modern art sale at Sotheby's and most of the art was at least 30 or 40 years old. Now you go to a modern art sale at Sotheby's and you can buy stuff that was painted 3 days ago.
Yeah, because the artist has a brand and has built a name for themselves while they're working.
Right.
Yeah. Okay. Are NFTs art?
No.
Okay, why?
Well, I mean, so like
I don't think so either, but I just think they're ugly. But that's not a good answer.
So
What's your answer?
there's two different ways to
You
understand
can't
the
say
question.
NFTs are ugly.
They're all ugly, every one of them.
So the first thing to say is like an NFT is an arrow, right, which points to something on the internet, on the interplanetary file service or something, and the thing that it is pointing to is nearly always sometimes it's like an NBA top shot. No one considers that to be art.
Michael does. Avid collector.
But like, let's say it's done by someone who considers themselves to be an artist. People, right?
Fine.
Like that art is objectively terrible. That is, people makes really, really bad art.
I wouldn't put one of those things on my wall if they paid me.
If you look at there is an aesthetic to to what you find on OpenSea, and it's very digital and weird. You can look at beeples and Bored Apes and Mutant Apes and Packs and you name all these people who are selling this, and you can pretty quickly you get a feel for the aesthetic.
Yes,
and the aesthetic is cheap and nasty and terrible, and there's no actual like aesthetic value in there.
Right.
So insofar as there is any kind of aesthetic object, the aesthetic object is just like bad.
Yeah,
but
almost video game quality.
But more to the point, like the NFT itself is not the aesthetic object. The NFT itself is some weird tradable token that is somehow
maybe
linked
connected
to the aesthetic object in some weird like way that no one really understands very well, and is mostly just a speculative.
This guy doesn't understand community.
Yeah. Oh, yeah. It's the community. You're leaving out. It's the community.
So that's the thing, right? So like, consider the Bored Apes. People don't really consider the Bored Apes to be art. They consider the apes to be a community.
Status symbol.
It's a status symbol, right. Exactly. So like I think one of the things that we have seen in the NFT world since the big Christie's auction of the Beeple is that like for a hot minute there, people thought, oh, NFTs, that's a way for artists to sell art digitally,
Which sounded great to me.
Which sounded great for a minute. And then very rapidly, what you saw in the NFT world was that community moving away from that paradigm and towards this, this idea of collections, whether it was apes or rocks or penguins or whatever you have, and the word art basically just dropped out of the NFT lexicon pretty quickly.
Yes, so they became more like collectibles, tokens to join a community, and that actually makes a lot of sense to me. It's like a backstage pass. The concert ended, but you hold on to the backstage pass because the artist is meaningful to you, or you had a great time, or you just happen to collect things as souvenirs.
Yeah.
I understand that. I just don't understand why somebody else would buy it.
The secondary market in backstage passes is like, that's the weird bit, right? There are some things that you get like bizarre secondary markets popping up, and baseball cards seem to be like really hot right now for reasons I have no idea. And one of the things we saw in 2021 was or 2020 and 2021 was this like really sharp rise in the value of Rolex watches.
Yes.
And you're like, okay, so I guess like suddenly like there's a community of Submariner lovers out there, and
let's assume they weren't melting them down, right?
Well, no, they're not, because the ones that are valuable are all steel.
Yeah.
And that market is now going down. But like, there are little collector-y crazes, but and so that's art collectors are collectors, and so there is a little bit of that dynamic of wanting to identify the collector craze and wanting to buy the stuff that other people want to buy. But most art collectors aren't honestly like that. Most art collectors actually do want to like the art they buy, live with the art they buy, but they want to hang out with those artists and support artists, and that all of that kind of stuff is a much more real and physical form of community than you find on
people that go to gallery openings. People that that's a community,
right?
Because first of all there's a price to get in,
right? And if you want to go to the opening week of the Venice Biennale when the whole art world is in the same place at the same time, those hotel rooms don't come cheap.
Enough of the art.
Well, I want to ask one more art-related question. what would Warhol be doing in 2021, 2022? And what would Andy Warhol actually be doing right now? Because from whatever I know about him and what he did and why he was so important and the quote unquote community around him, I feel like he would be perfectly at home in this world of crypto and NFTs and everybody's famous for 15 minutes.
No,
and
he would hate it.
You think he would hate it?
So he loved it in the
Okay.
So this is the thing. Andy Warhol was a contrarian. He was deeply he was a much more avant-garde artist than people give him credit for. He gave up an incredibly lucrative career as a commercial illustrator to make much, much less money making art that people hated. And when he first came out with the soup cans and the Marijuana, like people actually hated that, and they called it neo-dada, and they thought it was incredibly nihilist, and they hated it. Eventually, all that changed. But when it changed and when people started like loving it and putting it on tote bags, that was when he said, oh, I'm no longer a painter. I'm not going to do paintings anymore. I'm just going to do films. And he made unwatchable films that lasted for, 8 hours and were all projected on top of each other and, were just impossible to watch. When New York entered a very rough patch
70s.
economically in the 70s.
Yeah.
He created this thing called business art. He was, because as everyone was becoming very holier than thou and was like, extolling the wonders of the abstract expressionists or whatever, like he was like, as a you to all of those people, he's like, I'm just going to make art as a business. I will endorse anything. I will sell anything. If you want me to make your portrait, I will make you a portrait for $10,000. And I'm just going to I'm going to create a business, and the business itself is going to be art. And the reason he did that at that time was because it was an incredibly contrarian thing to do. Okay. And everyone was like, how dare you bring money into art like this? How dare you financialize art like this? Art is
So
pure.
Then he took it all the way.
Art is like a pure and ethereal thing. How dare you attach a dollar value to it? So because it was offensive to so many people, that's why he did it.
Okay.
Now that art has a dollar value everywhere, now that everyone is playing that speculative game, he would hate it. He never wanted to do what everyone else was doing.
Okay, so I had it totally backwards, not knowing really anything about him other than what everyone else knows. I just the opportunism didn't seem to me as ironic as you were saying that it was.
I can, again, if I can plug a great book, the Blake Gopnik Andy Warhol biography is very thick, and it comes with a huge number of footnotes, but it is the definitive biography of Warhol, and you will really understand him if you read that.
You wrote about the billionaire class buying up sports teams in Europe and the U.S., and you admitted somewhere in the piece that this is not your forte, sports in general, even football, or what we call soccer here. But like, this to me seems like it's on a parallel track with all the art stuff and just there being a lot of money available for billionaires to express themselves.
There are certain paintings that are true trophy assets, and if your name is Ken Griffin, you really want that one painting, that one Jasper Johns flag, that is the true trophy, and sports teams have become trophy assets for billionaires, and it's interesting to see that play out in the UK in particular, or in England in particular, I should say, because this is one area where the English gave up long ago on having any particular sort of, we want our sports team owners to be English.
Yeah.
And so
who's buying them? Russians and Americans?
So it's mostly the Americans now.
Okay.
It was the Russians for a while, and there's a lot of like Middle Eastern sovereign wealth funds and that kind of stuff going in. But right now, it's mostly the Americans. The person who just bought Chelsea for $3 billion was American. And remember that Chelsea was famous for just being this black hole that Roman Abramovich would pour more and more money into. Like Roman Abramovich bought Chelsea for however much he paid for it, and then spent like another $1 billion just like subsidizing the losses. So, the net present value on any kind of DCF calculation of like how much Chelsea is worth is clearly negative. But
There's one Chelsea.
Chelsea became the most expensive sports team ever sold in the history of the world for about 3 weeks before the Denver Broncos got sold.
Right.
And so you can't back out that valuation in any sort of any way other than just like
It's a vanity purchase.
But
This
that's the
is a
thing.
toy.
There's 30 teams in the NBA. That's it. There's only 30. And you can't have it, right? Unless you're willing to pay ludicrous sums. And it never makes sense financially.
Well, except for so what's super interesting is that now you have two other things happening. One is that there's a bunch of billionaires who are buying up multiple teams. It's not enough to own the Boston Red Sox. You also need to own Manchester United at the same time. And then the other thing is that, of course, hedge funds and private equity and the people who actually do want to make money are getting into it because they see line goes up, right? And they're like, I don't care if this loses money on a sort of cash flow basis for 5 years, as long as I have a thesis that there's always going to be a billionaire who wants to pay more money for it than
Probably will.
right
Well,
now.
when Ballmer bought the Clippers, everyone was like, I can't believe he paid whatever he paid, $3 billion, $2 billion, I don't know.
$2 billion, I think, for that one.
Like people were like, oh, what is he doing? This, it's like, dude, he has like 40 billion. He doesn't give a shit what you think it's worth. He wants it.
So this is where it gets really interesting, right? That when you get the billionaire acquisitions of sports teams, someone like Ballmer buying the Clippers, they really are using like play money.
Yeah.
They can find that in cash very easily. They can pay it. It doesn't affect their standard of living at all. They don't need to give up anything they love in order to buy it, right? And that's how everyone thought of Elon Musk's bid for Twitter, that he was like, I'm just going to buy this with play money.
Yeah.
Then it turned out that the amount he bid was actually much more than play money, even for him. He's the richest man in the world, but like he's not liquid. And if he needed to find this money, it wasn't going to be easy. And that's when he started getting second thoughts and buyer's remorse.
But the billionaires that bought, like the Warriors, I'm assuming they're profitable because they're multiple year champions and you sell a lot of merch, you sell very high ticket price.
I've never entirely. No one has ever been able to show me that there's any real correlation between winning championships and making money.
Well, the TV rights in some sports are shared across all the teams, but in other
Exactly.
sports they're not. So, for example, the Knicks own their own TV rights.
Right, but that's got nothing to do with winning championships.
Well,
Clearly.
not in New York, but in some markets, if you do really well, the ticket prices can go up and the TV viewership goes up. Let's assume there's something to it. I don't know that there always is, but let's assume
Like the
there's
most
something to it.
valuable sports team in the world is the Dallas Cowboys, and they haven't won anything in living memory.
That's right. That's right. So because in the NFL, the teams share the TV revenue.
But so explain to me, why is it that the Dallas Cowboys are worth like 3 times as much as some other NFL team if they just share the TV revenue? What makes the Cowboys, and when they're not winning championships, what is it that makes them valuable?
Because there are
Merch.
far-flung Cowboys fans all over the world. There's something about that team that has a global fan base, and you couldn't say that necessarily about
The Jaguars.
Kansas City Chiefs
So how do the Cowboys monetize that fan base?
selling merch. It's like big numbers. But their ticket price is higher. There's a lot of wealth in Dallas. You couldn't necessarily charge the same in Green Bay, even if Green Bay's a better team than Dallas, and they usually are. There's something. Dallas is one of those cosmopolitan
I will say,
cities.
like, I have been to one American football game in my life. It
What
was
game was
at
it?
Cowboy Stadium.
It's not how was it?
It was amazing.
Yeah.
It was a lot of fun. I didn't realize how similar it was to like a rock show.
Yeah.
Yes.
It's
Concert.
very noisy.
Yeah.
There's the crescendos.
Totally.
It goes up, it goes down. Everything is perfectly timed. There's the music. There's
it's a production.
the crowd. Yeah, and I could totally understand how you could get caught up in that and really love it. But of course, me and the 70,000 other people who were in that stadium that day were a tiny minority of the people watching that game.
That's right.
And honestly, like we could barely tell what was going on the field compared to people watching it on TV who could really see what was going on.
It's a
And
terrible
very
experience in
different-
terms of getting like football sucks. You can't really see what's going on. It's much better on TV.
Yeah. The football experience is much better with Red Zone, watching all the games at once. and they just show you the team that's about to score, and then they switch to the next game, and you don't even.
I will
actually
say,
have to,
out of how many podcasts have we done so far on this show? 50 something.
Yeah.
This is the first time that we got through one topic, and we've just gone.
we
right?
did pretty.
We
good.
normally get through 6 topics. We're just rambling.
We did pretty good though.
It's a good ramble. It's a good ramble.
Actually, we're gonna do favorites now.
It's also the first one that has talked about sports and art.
Yeah, we did. We covered football.
How
and
many
Basquiat.
topics did we miss? How many topics did we miss in the pod?
I don't know. There's a bunch of boring shit we didn't get to this time.
6.
We were going to talk about Goldman Sachs losing $1 billion at Marcus.
Marcus.
You probably have a good take on that. Will they keep going, or will they at some point be like, turns out consumers aren't really that interested in us?
I mean, right now, I guess, the interest rate environment is making it a little bit more attractive to play that game, so they'll stick around for a while.
How are they losing that money?
How the hell do you lose $1 billion on that?
Are there commercials
How is it
for
even
Marcus?
possible?
I only watch streaming at this point. I wouldn't even know.
No.
There aren't.
I don't think so.
So are they giving away too much on the
there's
teaser
some.
rate, maybe?
There is no teaser rate. They pay like 60 basis points. There's no teaser.
Are they losing money on that?
No.
No, they're hiring people. $1 billion. Really?
The consumer bank known as Marcus will lose more than $1.2 billion in 2022, according to the bank's internal projections. Bloomberg News reported on Tuesday.
Were they lending to 3 Hours Capital?
This is the crazy thing, right? They don't have a loan book.
It's a dramatic
they
change
have a
from 3
tiny
years
loan
ago when David Solomon claimed if Marcus, quote, were out in Silicon Valley and made 20% of the progress that we've made, we could get a lot of credit and people would be throwing money at us to own a piece of this business.
I mean,
Not yet. Or not,
the
not at this
whole
point.
the whole consumer banking thing became super hot for a while, and I never understood why. Everyone, came out with a checking account with a debit card attached to it, which is very table stakes, and they're like, it's free. And you're like,
this
great.
is so this is so crowded. High yield savings, by the way, 1%. LOL.
Is that Marcus's
yeah.
homepage?
Automate your investing. See your personal loan options, credit cards.
It's SoFi.
It's SoFi.
But it's also Dave or Varo or Chime or they're all basically the same product.
Customer acquisition in that space is so expensive.
But the thing that Marcus and Varo have that like Chime and Dave don't is that they have actual banking licenses. They're actual banks, so they don't need to pay a huge amount. So they can actually start doing fractional reserve banking if they want to.
Right.
But yeah, the whole space seems massively overvalued, and Nubank did a great IPO at the top of the big
right
one
at
in
the top.
Brazil, and that's just been falling off a cliff ever since.
Part of the rationale behind Marcus at some point had to have been, we'll spin this off, and it'll be a $100 billion standalone fintech giant. And that's obviously not going to happen, at least not in this cycle.
Right.
So,
looks like every other neobank.
Looks like everyone.
Yeah.
All right, let's do favorites. Felix, you have Meet Me by the Fountain, an inside history of the mall. Tell me about this. Why should we read it?
Alexandra Lang. So, number one, Alexandra Lang is just this amazing author, and she's done an amazing job of looking at the history of the mall, which now, we have to call the mall, right? It's not the shopping mall anymore. But in the early days, it was the shopping mall. And the reason why these things made money is because there was this thing called the Gruen transfer, where people used to go shopping when they needed something. And then at some point, people went to the mall because they wanted to go to the mall, even if they didn't want to buy something. And then once they were in the mall, they wound up buying stuff. And there was, the mallification of America. And
We used to go to see girls. So when we were
That's
when
the
we were
Gruen
14, we didn't have driver's licenses. There was no internet. So we would get our parents to drop us off in groups of 7 and 8 young boys. And we had no money, but we didn't want to buy anything anyway. There were girls there. That was just how you did it.
And you grew up in suburban
90s.
Long Island or wherever it was.
Roosevelt Field.
And that is, as Alexandra really shows, there is this human need, this really, really basic human need and desire to sort of hang out with other people, for there to be some kind of a central square where people can go to and can see each other and can interact.
So for the suburbs, that's
and
the
in
mall.
the suburbs, the wall was the only game in town.
Yeah.
And as shopping has become increasingly digital. Like the mall has. I was just down at the South Street Seaport last night, and they have a big mall there, the Pier 17, and they have a new mall cropping up right next door called the Tin House, and neither of them have a single shop. It's all like food and experiences and that kind of thing.
Have you seen a concert on the roof at
And
Pier
they
17?
have concerts on the
pretty
roof.
Cool.
Yeah,
it's
great
really
views.
Nice. Did you know that South Street Seaport is privately owned?
Was Howard Hughes, no?
Yeah, it's the only privately owned neighborhood in Manhattan. Like the land is owned by the corporation.
Really?
And Bill Ackman's on the board, so he owns a piece of Manhattan. But yeah, it's corporate. South Street Seaport is corporately owned, but I think the NYPD have jurisdiction over it.
Oh, I'm pretty sure that if you commit a crime in the South Street Seaport, the NYPD will have no compunction.
Ackman doesn't have a private military policing it. All right, so it's called Meet Me by the Fountain. You liked it?
It's a great book.
Good book? Okay. Michael, what do you have for favorites?
I'm shocked that Shari likes The Old Man. It's like a little slow.
So that's my favorite. Is it yours also?
I'll let it be yours.
You watching this?
Is this a thing on the telly?
Yeah.
Yeah.
No.
It's on
FX/Hulu.
Hulu. It's Jeff Bridges. Would that change your mind? I think it's his only TV show he's ever done.
Okay.
So, and he's not playing older Big Lebowski. It's like it's very different. I don't know. I love him. I can pretty much watch.
So
but you know who else is in it?
Lithgow.
Who's even better? John Lithgow.
Yeah, legend.
So these are two great actors, and it's a really suspenseful. We're on episode 3, and I think there's 4 out.
I was on the train late the other night, and I had nothing to watch, and I saw Reservoir Dogs was on Netflix. I haven't seen that in a while, and I just watched the first 10 minutes. Like, holy shit, what a movie!
Yeah.
Oh my god.
Still watchable.
First 10 minutes.
The first 10 minutes is I don't tip scene. You know.
Yeah.
And then goes right into the aftermath of the robbery.
Such a good movie.
Like immediately.
Yeah.
Good movie. You a Tarantino guy or not really?
Yeah.
You are.
Yeah.
Okay.
No, we did Jackie Brown recently on Slate Money Goes to the Movies. And
Okay, I
that
asked you about that.
really holds up.
So you and I did an episode of Slate Money
We
Goes
did
to the
Wall Street,
Movies.
right?
We did Wall Street.
Yeah.
It was so much fun.
Yeah.
So how often are you doing those? And you're going away from just Wall Street movies. You're doing like all movies.
Yeah. I mean, well, we're not doing we'll see.
Why
But,
Jackie Brown?
We had Ben Horowitz on, and I thought he would be a very interesting person to talk about Jackie Brown, and
Why?
he was. Because he grew up basically around Black Panthers and knows the neighborhood really well, knows the shopping mall where
The final scene in the shopping mall.
I think he
That was
actually
so good.
I think he actually saw Jackie Brown when it came out in that shopping mall.
People hated that movie when it first came out because it wasn't Pulp Fiction.
It's not Pulp Fiction.
But has it
so
aged
good.
well?
It's aged
So
unbelievably well.
I saw
Yeah.
that was the only Tarantino movie that I hadn't seen, and I saw it a year ago, and it was not like it's not Kill Bill or whatever, but it's good, and it definitely ages well.
It's his most grown up movie, and
Because it's not
It's
about
the
De
better
Niro,
for
it's
it.
about Robert Foster. It's really about that character.
it's also but yeah, I mean, De Niro,
But De Niro was good.
has a supporting role, but he's very good. It's the last time that De Niro actually acts well,
and he's
in a movie.
understated.
Yeah,
Very.
Yeah.
He's not playing Robert De Niro.
right.
Okay. But that's not the best Tarantino movie. Like,
Inglourious Bastards is.
you think it's
Sorry, that's my favorite.
My unpopular opinion is the best Tarantino movie is True Romance.
Yes, well, fine, but that's Tony Scott.
but he doesn't have the director credit. But you would say.
I mean, that's
love
right
that
up there.
movie.
Yeah, it's amazing.
I think that's one of his most rewatchable movies. Like if I'm passing by Pulp Fiction, I can't
The
do it
Dennis
to myself.
Hopper Christopher Walken scene is like a top 10 scene.
So okay, you want my little
Yeah, we
nerdy film dive into that scene?
Duncan wants it. Duncan's a film guy. He wants it bad.
Yeah.
Okay, so oh god, I'm gonna have to make
He's
sure I
got
get
the
this
thing
right.
wrapped around his hand as he's talking.
So no, so that scene is played as a love scene.
Between the two of them?
Yeah.
What, you know who I work for?
Between Dennis Hopper and Christopher Walken, right?
Yeah.
And the music that plays while Dennis Hopper is making that final, like he knows it's his final monologue, that it's the last thing he's going to say before he gets shot to death.
You know what? I will take one of those Chesterfields after all.
Yes.
That one.
Yeah.
The music playing is the Flower Duet from Lakme by Dalib. This very, very la 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 la. This like very like flowery.
Oh my God, I could hear it.
Love duet by a very flowery French composer. And it's the same music that British Airways used to use in all of its ads for many, many years, which were also directed by Tony Scott. And yeah,
What?
and Tony Scott just goes back to this.
You need a minute? You okay?
I didn't know any of this.
Okay.
And so basically, the way that scene works is that he shoots it. If you look at the way that the camera goes back and forth between the two men, the zooming in, listen to the music, listen to the framing. If you watch that scene
On mushrooms.
with only listening to the music and not listening to any of the dialogue, without like realizing that someone's tied to a chair and is all bloodied up, but it's like it is framed and structured and shot and has all of the music and everything of a complete love duet.
Now, why would he do that? Because he said, "I have two of the best actors ever at my disposal, and I want them to. I want to do it this way."
What happens is that Dennis Hopper's character like forms this like incredibly intimate connection with Christopher Walken's character by coming out with this monologue.
And the history of Sicilians?
He identifies him and he manages to and then what Walken says at the end is like, I can't remember what the line is, but he says something along the lines of like, no one has ever said anything like that to me before. You know, it's like, you have touched me. Like, he's like, what he says is like, I'm going to kill you myself. I've never, like, I always get like my henchmen to kill you, but I'm going to, because of what you just told me, I'm going to do that
There's another movie
myself.
where it's like, finally a man worth killing. Like something like that.
Yeah.
Yeah, it's something to that effect. Like, this guy was worth my time killing. Right.
What a movie.
What if, now I got to go watch. Now I got to go watch it again. Felix, you have fun today?
I did. This
Yes?
was awesome. Yeah.
All right, so we're going to start recording now. We're going to do it for real now that you're all warmed up. You're laughing, but you're not sure. No, 100%. This was a lot of fun for us. I so appreciate you coming by.
It's been great.
I want to come back on the Slate Movie Podcast.
Come back on the same movie podcast.
What, are you doing any more stuff that's like red meat for me? You going to do Boiler Room, or are you going to do Margin Call, or you've probably done all those, right?
You know, I'm trying to remember if I think we
Supersize
were
it.
gonna do Boiler Room and then didn't. So
Oh,
maybe we can come back and do Boiler
You
Room.
can't do it with anybody but me.
Okay, we'll do Boiler Room with you.
I'm going to give you inside shit from
and
the making of that movie.
You can
that,
explain why Ben Affleck is never in scene with anyone else.
I still never understood the building next door, the empty building with all the phones on the floor. What was that?
I'll tell you, but not on this podcast. We're going to do that on Felix's podcast.
It's going to happen on my podcast.
All right, so people can find you, your stuff for Axios?
Yeah,
there's an email with that?
Axios Business Suite. Just go to axios.com and sign up for any of the business newsletters. They're all fantastic. Axios Markets also comes free with Axios Macro by the great Neil Irwin and Axios Closer. And yeah, my one is on Saturdays. I have the Saturday episode, I guess you could call it.
Yeah,
of Axios Markets.
I never miss it. And Slate Money is, when does that drop?
And that's also Saturdays.
It's every Saturday it comes out. Okay, so check out Slate Money to hear from Felix and sign up at Axios.com for the email blast, which I never miss. I think you're one of the best financial writers ever. that I've been reading your stuff for like 11, 12 years.
It's been a minute.
Every time I read something that you've written, it always makes me think about things in a way that maybe I haven't. So keep up the great work.
Thank you.
Thanks for coming
and
through.
I hope you get into like buying art. It's good for you.
I don't have the money yet. I can only do fractional, but we can all dream.
Just don't do that.
Nicole, you subbed in for John today. I think
Good
you
job,
did great.
Nicole.
Did you have fun?
Yes.
Did you learn some stuff today?
Yeah.
Duncan, did you learn anything today?
Yeah.
You did, right?
Yeah, I've got to go watch True Romance. I've actually never seen it.
What?
It's the only Tarantino I think I've never seen.
How are you calling yourself a film person if you
Duncan!
Yeah, I don't know.
romance?
I just haven't seen it.
Oh my God,
man.
you're so lucky.
I'm watching Seven Samurai right now, so I'm
You're
I'm
in for
doing
a treat.
something.
So now you're watching Tarantino source material.
Yeah.
Basically. All right, great job today. Thanks for coming through. Do we have any announcements to make before we leave?
I think we're good.
Like and subscribe already, would you please? All right, we'll see you guys next week. Thanks for listening.
Brilliant.
That was fun, man. Thank you so much.
Oh, it's fine.
We go